if you can't read market structure, you can't read the market. Every strategy, whether it's smart money concepts, ICT, support and resistance, or price action, starts with understanding market structure. In this video, I'll explain it in the simplest possible way. Welcome back to Cenach Trade Lab. If you're new here, this channel is dedicated to helping beginners traders build a strong foundation before moving into advanced concepts. This video is the first lesson in our beginners trading series. By the end of this lesson, you will understand what market structure is, why it matters, how to identify it on any charts. Don't worry if you have never traded before. I will keep everything simple and practical. Let's get started. So, imagine you are climbing a staircase. Every time you step higher, you don't jump to the top. You take one step, pause, then take another. Price behaves that same way. So it moves up, then it pulls back and continues up like this. Price moves up, it pulls back and continues. Or price moves down, pulls back and continue. Pulls back, continues down. So that is the movement of the market. So this repeated movement is called market structure. It's called market structure. So in essence, market structure is simply the way price moves. Whenever price changes direction, it creates what we call a turning point. So if price turns downward, that point is called a swing high. If price turns upwards, that point is called a swing low. So giving an example, this is what I meant. Price moves up, then pulls back. Like I say, whenever price changes direction, it's called a turning point, right? So now this point that price changes its direction, this high here, is called a turning point. Called a turning point. So now what do we call this point? This point is what we call swing high. Swing high. Since that's the upside, is called swing high. Then this turning point here price reached here after price pull back. Price now turned and move continue upward. And this turning point now below, this downward turning point, this down turning point is what is called swing low. Swing low. That is, if price turns upward, is what we call swing low. If price turns down, is what we call swing high. So here price reaches this point, it turns down. So we call here swing high. It reaches this point, it turns upward. That's what we call swing low. So identify it. So this is swing high. here, a swing low. So wherever price turn, if it's turning upward, like I said, turning upward, swing low, turning downward, swing high. It applies both when price is moving up, when price is moving down. Price turned upward here, swing low. Price turned downward here, swing high. So this place is swing high and it continues like that. So all these points, these turning points are called swing points. Now, when it comes to the movement of market structure, price move in three phases. We have the uptrend, we have the downtrend, we have the range or consolidation phase. Phase. You understand? So now, an uptrend happens when buyers are strong and sell stronger than sellers. Sorry, when buyers are stronger than seller. So in the case of an uptrend, price keeps making higher high, higher low. Think of someone climbing a hill. They move up, take a short rest, then continue climbing. So higher high, higher low, higher high, higher low. As long as this continues, the market is bullish, right? So now this is scenario here. Price moves up, like you're climbing a hill now. Price moves up. This one higher high. Then you take a rest, continue upward, take a rest, which is what? The higher low, then continuous upward. What do you call this? That is continuous climbing, higher high, took a rest, higher low, continuous climbing, higher high. So this is the case of an uptrend, whereby price keep printing higher high, higher low, higher low, higher high. So this is the case of an uptrend. Higher high, higher low, higher high, higher low, higher high, higher low. Call this what? Uptrend. So as long as you keep seeing higher heights, higher low, higher high, higher low, as this continues, the market is what? Bullish. So that is another term used for what? Uptrend. When market is uptrend, we say that the market is bullish. Now, when it comes to the downtrend, it actually means that now everything, now reverse everything that we have taught here now concerning the uptrend. So the downtrend is like the opposite of an uptrend. Sellers are now stronger than the buyers, whereby price now starts creating lower highs, lower low. lower highs, lower low. So imagine someone walking downstairs. Every step is lower. Every step is lower. So you go lower, you keep going lower and taking a rest, just like the example I gave when someone was climbing a mountain. You understand? So just apply the reverse in that case. So we have lower high, lower low, lower high, lower highs, lower low, lower high, lower high, low. Sorry. So that means market remains bearish. So this is the scenario. We have something like this: lower, lower, lower low, lower high, lower low, lower high, lower low, lower high, and as long as this continues, what it shows that we are going downwards. So market is what? Bearish. That's another term used for what? Downtrend. Bearish, downtrend. So this is it. This is it. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, called downtrend. Downtrend. So now when it comes to the third phase, the third and last phase of market structures, many beginners think the market is always trending, but that's wrong. Sometimes buyers and sellers are equal. The other is not stronger than the other. So they are simply in a tug of war. You understand? Where they are equal, they have equal strength. So price simply moves sideways when it comes to that case. And this is called a range. A range. So inside a range, price goes top, bottom, top, bottom. So the trend, no trend exists there. You understand? No trend exists there. Let me give you the scenario, the price action here. We have this where buyers and sellers are of equal strength. So price moves this way, sideways. No one is stronger than the other. So here in this case now, no trend exists. No trend. So identify here. So the only way a trend continues is if price breaks either above this line or below this line and continues giving us either higher high, higher low, or lower high, lower low. Understand? So now let me talk about trend continuation. So many beginners panic during pullbacks, you understand? But trends don't move in straight lines. An uptrend needs pullback, a downtrend also needs pullback. Without pullbacks, there is no healthy trend. So put this in mind. A pullback, a pullback, a pullback does not equal reversal. So if you have that in mind, you won't keep fearing every pullback whereby air price is trying to pull back and make a correctional move and you are getting scared. So now, that's why I say pullback does not equal reversal. Without pullbacks, there is no healthy trend. Now, let's go to the term breakup structure. Now, you guys know what trends is. I've taught how trends continuous. Example, price makes higher high, higher low, higher high, then breaks above the previous high. So now that breaks confirms buyers remains in control. This is called a break of structure. So now BOS confirms what? Continuation. When I mean BOS, I mean break of structure. Now confirms continuation. Higher high, higher low. Price now breaks above this previous high. So now it confirms that what? Bias remains in control. So like I said, it's called a break of structure. Like the term I use what called BOS. BOS, break of structure. Same things apply when in a downtrend. Price moves, created a lower low and now a lower high. Now breaks the previous lower low. So it shows that what the sellers are still in control. The sellers are the one in charge of the market. So what we call as it breaks that lower low, a break of structure. breakout structure. So now, like I say, BOS confirms continuation. Now, what is change of character? You guys might have seen it a lot. Now, imagine price is making higher high, higher low, higher high, higher low. Suddenly, instead of making another higher high, price breaks below the last higher low. So what does that tell you? That it shows that something has changed. The first warning is called change of character. Change of character, shock as you might call it, is an early warning, not a confirmation. It's an early warning, not a confirmation that price is reversing. You understand? So this is the scenario here. Price was making what? Higher high. Sorry. Price was what? Making higher high, higher low, higher high, higher low, higher high. So now price now created a higher low now. So what would you expect? You expect price to continue upward to break what? This recent, the last higher high and continue the upward movement. But price did not do that. Instead, what price did do? It came and broke this last higher low. It breaks below the last higher low. Like I said, which signifies that what? Something has changed. So that first sign now, that first warning now, that the buyers, like in this case now in the uptrend, that the buyers what are losing strength is what we call change of character. So what we call change of character. Change of character. So like I say, it's a warning, it's a sign, not a confirmation that price has reversed. Just that. So it's a sign. So if we want to be certain that price has reversed, I will teach about that in the advanced market structure class. So now let me make the reverse of this. In the case of a downtrend, we have lower low, lower high, lower low, lower high, lower low, lower high. So you would expect price to continue lower by breaking this last lower low. But what happened now? Price breaks above this lower high, giving us what? A change of character. So there's another term used for change of character, and that is what we call market structure shifts, which is known as MSS. So note again, church is an early warning, church chalk, whatever you call it. What we know is change of character. It's an early warning, not a confirmation. So going to live charts now, let me give an example. before we continue. So now, in the case of an uptrend, you will note, look at it, what do you call higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So we call what? Call this an uptrend. Now, this a break of structure. Call this what? A break of structure to the upside since it's an uptrend. So these are example of what I've taught so far. This is an uptrend. So price is making higher highs, higher low, higher low, creating break of structures. Break of structure as it go. Break of structure here also. Now here is the case now of a downtrend also. Here you have lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then as price keep breaking the previous lower low, it creates break of structures to the downside, which signifies that the trend continues. Break of structure. So now in the case of now a change of character now, this is where a change of character comes in. We have this, whereby as price pulls back, retraces here now, we expect that price should expected that price should continue lower by breaking this previous lower low. But as you can see, price didn't do that. Price came, broke the last lower low, lower high, sorry, to the upside. So this signifies what? A change of character. So you can go and do your own um, assignments to find out to do the reverse in the case of a uptrend to downtrend. But this one is a downtrend to uptrend. So we have a change of character here. So that is all about the example now. So now let's talk about um, structure-based support and resistance. Let's forget about drawing random lines. Instead, every swing high can become a resistance. Every swing low can also become a support. Support and resistance come from structure, not magic line. So you cannot draw any random line and call it support and resistance. So as a beginner, you're supposed to know what support and resistance is. So an example, When we are talking of a support, we are talking of like the base, the floor. When we are talking of resistance, we are talking of what? The roof, the ceiling. That is what is stopping us above. Then below is the support, what is holding us upward. So you cannot just draw any magic line. Understand? Like I say, a swing high can become a resistance. An example like this, a swing high. You can see this serves as what? As our resistance. A swing low can become what? A support like this. So our resistance, our support, sorry, our resistance. So you don't just draw any random line. For example, let's go to the live chart to give you an example. So now this is a swing high. That is our turning point now, downward. So this is a swing high now. When price is moving out, after creating this swing high now, we draw this thing. So this swing high is what our support, our resistance. As you can see, when price first came here, it resisted, which is what shows us that this is indeed a resistance, right? Then this our swing low is what? A support. Support. In the case of here, price breaks a resistance, breaks and close above, that resistance turns into what? Into support. And as you can see, that is a support holding this swing low above. So when marking support and resistance, make sure you make use of your points, swing points to mark out support and resistance. Make sure you do your homework after listening to this tutorial. You go and practice. So I believe with this tutorial, with this class, you should know what market structure is, what swing high is, what swing low is, what is an uptrend, what a downtrend is, what a range is, what we call pullback, break of structure, change of character. So now, lessons, let me say as a take home, open your trading view and identify today's lesson on at least 3 different currency pairs. Understand? So to practice more, when you keep practicing, you understand more. Thank you guys. See you in our next class. Thank you.